Hi everyone. Today we want to understand a very important concept in stock market investing, which is EPS. So let's try to understand it through real life example. So if I ask you what should be the price of a shop in your city, should it be at whatever owner puts as valuation? So if he says, give me 5,000 crores, will you still buy it? The answer would be no, because it doesn't make any sense. Because he as a owner can put any number just to make profit, or should the price depend upon the earning potential of that shop? So owner might say that, look, today it's a bandar jameen, but tomorrow it will give you gold, and lot of customers would come because area is growing and you have such a great prospect. This again is based on lot of assumptions and potential, not based on actual facts. Or third, it should depend upon the actual profit the shop is making. So for example, if shop is making 10,000 rupees as profit every month, and hence the price of the shop should depend upon the profit which the shop is making. So I think all of us would agree that it is the third one, which is the right factor which should determine the price of a shop. Now compare it with stock market. Any company on stock market are priced based on perceptions and potentials and not on actual profit. That is why you would have seen a lot of companies which are loss making companies like Paytm, Zomato, Nika. They are loss making companies and still are valued very high. And this is where you need to understand what is EPS to understand the earning per share, so that you can understand what is the value company generates for shareholders. Let's keep this in mind and try to understand what is EPS. EPS is nothing but your net profit by total number of shares. And let's try to understand it to an example of ITC. So the net profit of ITC is 14,800 crores. And what is the total number of shares? 1,232 crores. And hence the EPS is 12 rupees per share. So essentially, if you hold one share of ITC, the profit which is allocated to you is 12 rupees, and that is the real value derived from one share. So if you look at the P&L statement of ITC, the net profit it has made is 14,802 crores, and the total number of shares is 1,232 crores. So if you divide these two, you would get EPS as 12, which means that company is generating 12 rupees for every one single share. Let's try to understand working of EPS in equity market. So you would have seen a lot of analysts from JP Morgan and different banks, mutual fund houses. They start predicting what would be the EPS of a company. So EPS is such an important number, which is important for every analyst to understand the fundamentals of the company. So let's try to understand this through example of TCS. So if you look at the historical EPS of TCS, you would see that since 2017, that EPS of TCS is increasing marginally. So if you try to understand this table, so in April quarter 2021, the forecasted EPS was 24.96 rupees, but the actual EPS turned out to be 25 rupees and the market went gaga because there was a positive increase of EPS of around 0.56, and the market would definitely have reacted positively to it. Similarly, you can see that sometimes EPS comes as a shocker and the stock market reacts to it and the stock prices go down. So that's how important EPS is for a company or for an analyst to understand the fundamentals of a stock. But there is a major trick which I want you to understand in EPS, because sometimes management of the companies are very smart. They try to play with EPS through different means. For example, in FY18, if you would have seen, the EPS of TCS is 67.61 rupees, which is quite low. And one more year of low EPS would have given a bad image to the management of TCS. Hence, what did they do? In 2017, TCS announced buyback of shares. So if you look at this news, TCS board approved 16,000 crore buyback at 2,850 rupees per share. And this was on February 21, 2017. So that is how sometime management plays to manipulate EPS numbers. And that's why I want you to understand EPS holistically and do your own due diligence before investing in any stock. Now, let me help you summarize quick points which you should definitely consider while analyzing EPS. First is what I said, that it can increase by share buybacks, or it can decrease by split of shares without any fundamental shift in net profit. So there are two ways to increase EPS. First, you increase the net profit, which is a difficult work. Second is, if a company has a lot of cash reserves, they can go and buy shares back from shareholders. Second point you should consider is that natural growth of EPS is a sign of growing company and vice versa. So if EPS is decreasing, don't invest in such stocks. If EPS is increasing naturally, you should invest in such stocks. Now, when I say naturally, it means that it should not increase by share buybacks or through share splits. So you should be cautious on that front. Now, EPS is also important for calculating P ratio, which we will understand in other video. Let me know if you have any questions in the comment section and I'll try to answer them. Thank you.